Good morning to all traders and welcome to this Thursday's market insights video. Today is the 28th of January. We have the end of the first month tomorrow, the last Friday of January trading session, right? So it's probably going to be interesting today and tomorrow. We're going to get quite a big moves. Volatility remains high. We've seen actually that being the case as well yesterday. In yesterday's session, we saw a very big risk-off move driven by a combination of events, mainly in the European Union before the FOMC, before the Fed's decision, right? Because don't really believe what you read about, yeah, the FOMC drove the dollar up. It's not the case, guys. Dollar started rising before, way before the FOMC meeting, right? And it was mainly because of the euro's decline. And euro declined, which drives the risk assets at the moment. And euro declined for two main reasons. One, there is this ongoing spat between AstraZeneca and European Union countries because of the reduced promised supplies of vaccinations. That is, of course, going to, have an impact on the economic recovery in Europe. And also, Dutch ECB member Klaas Knot comments in reference to euro's strength as he actually opened up the door unofficially to an additional deposit rate cut. Now, I don't think this is going to be the case for ECB. I don't really think actually the ECB will start considering about another rate cut, at least until the euro gets to perhaps 130 or so against the dollar, right? Now, as we've already talked about, and as expected, the FOMC meeting produced no changes. Rates remain at zero. Quantitative easing will remain in place as well, which is what the Fed chair reiterated. But he also said that in case it's required, it's needed, that they're going to step in and buy more. So from a previous point, like in the week where there were talks about, or some articles talking about a potential tapering, you go to, there is not going to be tapering. At least he's also said that it's very early to even talk about when tapering is going to happen. But at least in the US, as he said, at least we receive maximum employment. And now the real unemployment rate is around 10%. So it's not going to be in 2021 for sure. He's also stressed that the economy is very far from recovering and underscored that the stock market's speculative behavior is not really driven by accommodative policy, but is driven rather by the rollout of vaccinations and also hopes of a fiscal policy change that the markets still hope to see. Whether it's going to be 1 trillion or 1.1 trillion, it doesn't matter. Still, they want to see it. Now, euro dollar, we're going to talk about dollar yen and also about dollar CAD. Now, 1 and 2 on euro, 3 and 4. I talked about this decline, guys. We did the 38-point Fibonacci retracement here. Yeah. And I said I'm expecting another leg down. I am expecting another leg down. It's simple as that. Now, let's just do our Fibonacci here to see that we've probably broken. We are very near to break the 56 Fibonacci. And I'm actually looking to get down to the 61.8. Now, if indeed this is the case and we ended here, it means that we are going to continue lower with another leg down. Potentially, because I see this as an ending diagonal, if you see, when I see an ABC and then an ABC, okay? This is what I'm looking at this, or an ending diagonal. Now, if we break above, okay, to fresh highs again, probably 121.50, most likely, what we're gonna get is an ABC, ABC, and 1, 2, 3, 4, and 5. And this is going to turn as a flat in wave B, okay? This is what the scenarios, at least I'm looking at the moment, the current scenarios are indicating. Okay, so this is it for euro dollar. Now, quickly on dollar yen. Dollar yen, yes, I remain optimistic about my scenario of an expanded flat over here. Do not forget that I actually remain adamant with my scenarios until I see an invalidation. Okay. For now, this is AB, and I'm expecting a C for an expanded flat. This is going to end around 104.55, 56, okay? Because we've got 1, 2, 3, 4, and 5. Now, on Tuesday, sorry, I was expecting this to move lower for wave Z, Okay, it didn't happen, but we also saw an alternative scenario, and I did mention that it could be a case where we ended down here and we're going to move higher up. Now this is 1, 2, 3, 4, and 5. Here's the thing: we have an interaction here between waves 1 and 4, and 1 and 2, right? So it could be like a case where this is going to turn as an ending diagonal. Okay, we could see more upside, then another move to the upside, and then go up again, and then start moving lower because I'm expecting another leg down, right? Or it could be a case where, well, we'll have to recount and end down here instead because it's going to be a reversal signal. Okay, and dollar cards, I think I haven't looked at dollar card for a couple of weeks, but is really interesting. Actually, it's one of the ones that I've been watching all week, to be honest. Wow. Ended diagonally in 3, right? So we'll get 4 and then we'll get 5. Now this wave 4 has a lot of upside because there is a lot of room to move up to, well, let's have a quick look. We can even go up to 134, yeah? 134. Now, what I'm looking though is the break of this trend line because this is the ending diagonal, right? We've got an ending diagonal here as well in 3. But in the larger degree, we are again in an ending diagonal. So, in case we break above this level, then most likely this is 1, 2, we'll get 3, 4, and 5, and then B, and then C for 4, yeah? Potential up to 134, it's not guaranteed, right? It could be a very shallow 4, we don't know. The other scenario is that this is A, this is B, and this is C. So we're gonna go down to 123.61 to end wave 3, which is what I wasn't actually expecting since the beginning, since the last quarter, to be honest. Okay, so it's one or the other. This is a very important level. Now, here's what I'm looking. I'm looking at the volumes over here. And the volumes, they're quite high to indicate that there's going to be a rejection over here. Perhaps in the first place, we're going to get a rejection then and move down here and then continue higher. But we don't want to break below 127.84. If we do, most likely we're going to get, perhaps we'll get like something like an ABC here, who knows. Yeah, we'll get another ABC, then an ABC. This could be a W, X, and Y, right, instead. Or, as I said before, if we go then and cross below the 126.77, then most likely we're going to head down. Okay, so this will be all for the day. Thank you for watching. I will see you again tomorrow.